With Jamaica passing all 4 tests from the International Monetary Fund (IMF) in the first year of the program, the international capital markets have again started to do business with Jamaica, signaling confidence in the government's economic reform program. In July 2014, government raised $800 million through a bond offer at an interest rate of 7.625% over 11 years. It's Jamaica's largest transaction on the international capital markets to date, and the fastest to be executed, being announced, launched and priced in 3 hours. The initial plan was to get $500 million, but after consulting with technocrats both locally and overseas, the government accepted $300 million more.
What this does is lock in what is likely to be the lowest interest rate for some time. It can always be wrong. But the Federal Reserve has indicated that they are going to be ending tapering this fall, and that the prognosis is that rates are going to rise.
The money from the bond will allow the government to fully finance this year's budget, fund its debt maturities for the next 12 months, and reduce Jamaica's vulnerability to shocks in the next year.
The fact that the international community is once again lending to Jamaica, and not just short term, but 11 years, is significant and says something about their confidence in our policies.
Another piece of good news for the Jamaican economy is the reduction in the current account deficit, closing the gap between imports and export. The Bank of Jamaica announced recently that Jamaica's current account deficit for the January to March 2014 period was $100.6 million. This means that Jamaica is importing less than it did in the corresponding period last year, when the current account deficit was $400.6 million. For 2012, Jamaica recorded a current account deficit of 14.8%, 11.5% for 2013, and so far in 2014, 8.8%.
When you ask the economists what kind of current account deficit can a country like Jamaica afford, they say it would be about 6%. So we are on our way there.
But that's not all. Inflation is also trending down. From January to May this year, total inflation was 2.4%, 1.2% lower than the corresponding period last year. Both the reduction in the current account deficit and inflation allowed the central bank to release foreign exchange into the market to slow the rate of depreciation of the Jamaican dollar.
One of the reasons for the foreign exchange rate depreciation is to stay competitive with the US dollar. So if they are experiencing inflation that is much lower than ours, then we have to devalue to keep the competitiveness. To the extent that our inflation is falling and coming closer and closer to, say, US inflation, then the reason to continue the devaluation subsides.
It is not the first time in recent months that the Bank of Jamaica has intervened, and the policy remains the same. As the governor has stated on more than one occasion, the Bank of Jamaica will intervene when the markets become disorderly, not when speculative pressures build up.
They set the price, but when it is assessed that they are really out of whack, central banks will intervene. You see it happening in the European Union, everywhere.
At the end of June, Jamaica's net international reserves stood at $1.376 billion, $223 million more than targeted. And what's more, the finance minister told Parliament recently that based on the government's assessment, Jamaica should pass the 5th IMF test for the quarter ending June. A team from the IMF will visit Jamaica in August to indicate if all structural benchmarks and quantitative targets for the April to June quarter were met. The Jamaican economy is improving, but the Simpson-Miller administration isn't ready to relax. The government remains focused on the need for further growth.
The priority must now be on growth and job creation, and the prospects look good. I'm aware of both committed investments and those nearing finalization of over $3 billion across a range of sectors, including agriculture, tourism, ICT, BPO, energy, and port operations. These investments relate to new projects and will be undertaken primarily by foreign investors over the next 12 to 18 months. But there are also numerous local investors who are stepping up to the plate. This is just the beginning, Mr. Speaker. Our progress must not only be sustained but amplified, and this will depend on the continued support of the government in its widest sense, the private sector and the international community. If we do so, we will be laying a foundation which will guarantee that Jamaica will be the place of choice to live, work, raise families and do business as we get into the further years of the 21st century.